Hello, everyone. Welcome back to another week on Moving to Georgia. I'm Sarah Mislowski with KeyPoint Homes Group. I'm a real estate agent that serves the North Metro Atlanta area, and I help people just like you that are watching and get information from my channel relocate here to the North Georgia area, and I help you move all over Georgia. So if you're thinking about making a move, make sure you connect with me. My contact information is below this video. But it has been a minute since we've talked about exactly what is going on in the Georgia real estate market. So if you're joining us on the live stream, make sure you leave me a comment. I'd love to know where you're watching from. And if you're joining us again, hello. Hey, Charles. Charles is joining us again this week. Welcome back. Happy to have you. I'm happy to be here. Last week, I had the pleasure of being down in Fort Lauderdale, Florida for a real estate conference. And it was a great setting for a real estate conference, but it was also on the beach. So it was very, very tempting to not go into the conference and just stay out there on the beach. But I was able to capture one fun day in the sun. So that was super exciting, but I missed being with y'all and I missed talking about real estate. So the purpose of this is to give you an update on what's going on here in the real estate market and, of course, answer your questions about what you're seeing, what you're feeling, questions about buying a home, selling a home, moving across the country, whatever you may have. We're here to answer that question. I am here to answer that question. I say we. Actually, my dog is down here on the floor. His name is Charlie, one of our three dogs, and he is really old, but he's gotten very, very attached to me in his old age. And so he likes to sit outside the door and paw at it whenever I'm in here. I'm doing the live stream every single Wednesday. So for the past 2 times, he's actually been in here and he just sits down there, which is nice. My other 2 dogs, you'll probably eventually hear them. If you're joining us for the first time, we're still in the process of renovating our house. So this is actually down in the basement of our house that I filmed these YouTube videos, and typically the dogs are upstairs and you can't hear them, but because we're down and living in our basement, close proximity, close quarters, typically you will hear the dogs bark at some point during the live stream or at least over the past couple of months. But we're so close to being finished with that renovation. So we are in the final stages. It took us 8 years of living in our house before we finally renovated, and don't do what I did. Immediately renovate your house if you can. If you're buying something that needs renovating or a fixer-upper, it's really painful after you've lived in your house for 8 years. I definitely do not recommend living in the basement. We should have gotten like an Airbnb and moved out. It's just not good when you're seeing progress or lack of progress day in and day out of the house when you can just like go upstairs and inspect and then come back downstairs. So definitely not something that I recommend. So welcome to the live stream. Where are you tuning in from? Make sure you hit the comment button and let us know. And if you have any questions, go ahead and ask those questions. So you know that I love to share with y'all some really good information about what's going on in the Georgia real estate market and specifically in the North Metro Atlanta area. And so I have some really good information to share with y'all. And we like to talk about stats and data, that sort of thing. But first off, let's share some good news that came out today. And that is the news on let's see here on mortgage rates. Sorry. I had to get a brand new computer. I lost my computer this past weekend. I thought it was stolen at a hotel, and apparently I left it in the hotel room. So I had to buy a new computer. And you know, when you're doing all the first things again for the first time, logging in, and it just takes a little bit longer. So good news for buyers, mortgage rates are poised to fall. So the Fed announced today, based on the economic inflation news, that they are going to put a pause to their Fed rate hikes that they've been doing. And that's a great news for buyers. We've been anticipating that at some point they're going to stop hiking the federal interest rate. And the great news is that they recently announced it this week that, yes, they are moving forward with those plans to pause all the hikes. So that means that interest rates, mortgage interest rates specifically, should start to come down slowly over time a little bit. Now, we're not going to see 3 and 4% interest rates like we did during the pandemic. Those days are gone, but hopefully we will see some relief from these mid sixes that we've been seeing currently right now. So it says the U.S. Federal Reserve isn't expected to announce another interest rate hike in the wake of the banking crisis, and they have been somewhat taming the inflation, but that's continuing to slow. They're still starting to see some good economic data indicators that are saying, okay, hey, we can stop increasing the interest rates, and that change in policy could give mortgage interest rates some room to come down. So I say some room, and they're not going to be like any drastic changes yet, because some of these Fed interest rate hikes have already kind of been baked into the mortgage interest rate. But we did see some relief today in mortgage rates. So they came down. I don't know if y'all can see that. Probably not very big, but mortgage interest rates came down 0.1% today, just today alone, based on that economic information. So that's great news for buyers. We can kind of stop with that holding our breath of our interest rates going to drastically go up again. And we know that at least from the Fed's policy that they are going to stop increasing interest rates, that in turn affects the mortgage interest rates. Not directly, but indirectly, it's all related. So that is definitely good news for buyers. I would hope that you would agree with that information. So let me know in the comments if you're thinking about buying a house this year, or how maybe those interest rates have impacted your ability to buy a house. One of the things that has impacted the Georgia real estate market is the fact that because the interest rates have been higher, it's really affected our local sellers. So one of the reasons why home prices have continued to stay the way that they are, which is high, and they've continued to steadily increase over time, is because of supply and demand. We have had a limited amount of supply, still quite a bit of demand for homes, and that has really put sellers in a good situation. And at the same time, because interest rates have been high, these would-be sellers that would make a move across town, or let's say that they would want to be in a bigger backyard, house with a bigger backyard, different school district, or they see a new construction neighborhood coming up and they're like, oh, I really love those houses. I would want to sell my house and buy that. Those sellers are not making a move locally because it's just so expensive for them to do that. Interest rates are double in a lot of cases of what they currently have. You got to keep in mind that a lot of these sellers or would-be sellers refinanced and got amazing interest rates over the past couple of years. And so they're sitting on 2.9% interest rate, and to then sell, use that equity and go out and buy, they're looking at a 6.5% interest rate. And that is drastically increasing their payment or would-be payment, or kind of like wiping away maybe a lot of the equity that they have, or negating a lot of that equity that they would have. So the reason that the inventory is so low is we're just kind of missing out on that would-be spring sellers market of sellers that would put those homes up for sale and make that move across town. So really the only houses that we're seeing coming on the market right now are people that maybe they've had a death in the family, there's been a divorce, maybe they've had a baby, maybe they're relocating for a job and they have to sell. So those are the types of homes that we're seeing hitting the market. And part of the reason why we're seeing home prices stay so steady and slightly increase, and still kind of creating this very, very, very strong seller's market. So of course, if you're joining us, make sure that you drop a comment and drop a question, drop a comment, tell us where you're watching from. We've got Charles watching from Nassau County, New York. Cindy Adams is joining us. Thank you. Thank you. Charles added the comment, people who bought in the 2% range will never move unless divorce or death. Yes. And in fact, I should have had this article teed up, but there was an article recently saying that even if there's a divorce or a death, a lot of these sellers are still holding on to these properties, and they're becoming like unintentional landlords. It's actually a really great side benefit. You don't have to sell these properties. You could hang on to it and have an amazing rental property with an amazing cash flow and equity in that house at an amazing interest rate. And in fact, if you're thinking about making a move across the country and you refinanced into one of those really, really great interest rates, I would strongly encourage you to see if it's possible for you to rent out that house and not sell your home, because that's an amazing investment opportunity for you to continue to build wealth and have someone else pay off your mortgage. But a lot of these sellers are turning those into rentals, or would-be sellers are turning them into rentals. And so they're not, those homes are not coming on the market. So that's part of the reason why we're having such a struggle with inventory in the market right now. So Freddie asked the question, when do you think rates will reach 5.5% or better? That is a fantastic question. That's like the magic 8 ball, right? And yet, if you look at a bunch of economists, they are predicting that interest rates will continue to kind of come down throughout the year. And even if you go back earlier in the year and you look at what economists were predicting, they were predicting that 5.5% interest rate to happen perhaps fourth quarter of this year or not until 2024. But they are predicting and expecting that interest rates will go in that direction. And I would say, I would bet on maybe first quarter, second quarter of next year when they finally kind of settle down around that area. It's going to be amazing when that happens. And I would caution you that we still have a ton of pent-up buyer demand. And so supply and demand, right? If interest rates get to that price and more buyers are like, okay, finally, this is a relief for me. Now I want to go out and buy. Then you just have an influx of more buyers into the market. But we still may not have the influx of sellers on the market. New construction is not keeping pace with demand, especially not here in the metro Atlanta area. And so more buyers, fewer houses. Then we get into a situation where we're going to have a lot of multiple offer situations again, or the savings that you're getting in the interest rate with a 5.5% interest rate. If you're having to pay that much more for a house or pay over asking for a house, it kind of wipes out that savings benefit. So what I am coaching clients on right now, and what a lot of economists and experts are also saying, is that if you have the ability and flexibility of time, and you have the ability to buy now, I strongly encourage you to buy a house now while you can, because while you're waiting on those interest rates to drop, home prices are still going to increase, and who knows what the competition is going to be like at that time. We know exactly what the competition is like right now. We know exactly what the market is like today, and you always have the benefit of refinancing your loan into that lower interest payment down the road, 9 months from now, a year from now. You have the ability to do that. A lot of lenders are offering very, very low cost or no cost ability to refinance. And so that's also something that you should take advantage of. So if you have the flexibility, and again, not everyone does, you may specifically not be able to move until a certain time period. But I would just strongly encourage you not to wait on that interest rate to drop and count on that to be the time to buy, because there are a lot of buyers that wanted to buy in 2021. The market was insane crazy. They're like, oh, we're going to wait until that calms down. Well, it did calm down, but it only calmed down because interest rates, jacked up, and interest rates, became a lot more higher, but home prices were still high. And now they're like, well, shoot, can't buy now because interest rates have wiped away all my buying power. And what I can buy is not what I wanted to buy. And then you're kind of stuck in a quandary. And I just don't want you to get left on the sidelines. I'll tell you a great story, or maybe not a great story. I had a buyer, a wannabe buyer, and she is local. She wanted to buy in 2021. Things got really crazy. She had a tight budget in 2021. Her wages have grown over the past 2 years, but not enough to significantly increase her purchasing price, right? Home prices have steadily increased more than steadily. I mean, 2021, 2022, we saw like 15, 20% year over year increases in home prices. So now what she could afford in 2020 and 2021 is now significantly more expensive, even though the interest rate was better. But the competition for those first-time homebuyer houses were so crazy. And now what her price point can get her in the area that we're looking in is a very, very, very starter home. So the most recent house that we looked at was 2 bedrooms, 2 bathroom, 1,000 square foot home in Gainesville for $260,000. I need to check in with the real estate agent to find out how much that house ended up selling for or going under contract for, but I can assure you that it sold for more than $260,000. And you might be shaking your head thinking, oh my gosh, 1,000 square foot house for more than $260,000. And yes, that is what the market is like now. Unless you're willing to buy a townhome, even then you're still looking in the upper 200s. Long story, sorry. But the point is that we went and looked at this house, and she wasn't thrilled that she was going to have to spend $270,000 likely to get only 1,000 square feet, and wasn't thrilled with what that payment was like. And I get it. It's incredibly hard. And I have a lot of sympathy and empathy for people that are in this situation. And yet she made the decision that it just did not work out for her at this time. And totally respect that. Your finances are exactly what they are, and only you can make the decision that's best for you. And her response back to me was that she was going to wait until the market changes. And I had to have that conversation with her that I don't ever see the market changing. Not around here. Not unless you move to a completely different location, or unless your finances drastically change to where you can afford more. But the market's not going to change to make things more affordable for you, barring anything drastic happening. And that's a really hard conversation to have. And so my encouragement to you, I made an Instagram post this week, and maybe it was a little bit unpopular, but if your goal is to be a homeowner, get in where you can, how you can, where you can, and start building that equity and stop paying rent. Pay yourself, live in a house that's less desirable for a couple of years, and then take that equity and then go buy the house that you want, or help make that next purchase much more affordable because you've built up that equity. That's really the only way forward in this market, unless you're moving to a more affordable location. And so a lot of you watching, Georgia is a more affordable location comparatively to where you live. For locals, these home prices are a little bit of a challenge, especially if you are a first-time home buyer. Anthony asked the question, any concerns with the debt ceiling issue impacting the housing market? Initially, I thought it was a nothing burger, but if this leads to credit tightening, does that hurt home financing? That is a good question. And I have something to share with y'all that kind of relates exactly to this question. So let me add this to the screen. Okay. Going back to Freddie's question earlier, these are what 2 economists say about mortgage rates. Lawrence Yun, the chief economist of the National Association of Realtors, stated that mortgage rates are likely to come down later in the year as consumer price inflation calms down. Again, they expect those rates to continue to fall over the course of the year. Now, okay, this is the chart and graphic that really talks to what you're asking, Anthony. Credit tightening, does it hurt home financing? So this chart shows you the mortgage credit availability index. The higher the number, the easier it is to obtain a loan. So the easier it is, and as you can see, part of the reason that we had the housing crash in 2006, 2007 is because it was so easy to get let me see if I can show you the year for that. There we go. Now the years are displayed and you can see that. Part of the reason we had the housing crash was because how easily and available credit was, and how loose and relaxed and wild, wild west the lending industry was back in 2005, 2006, 2007. They were giving people loans for house for more than what the home was worth with no money down. Essentially, if you could kind of like breathe and sign your name, you could get a house back then. And so you can see they drastically pull back banking regulations after that credit crisis. And now you can kind of see how tight the lending regulations have been over the past couple of years. I do believe that there will likely start to maybe be a little bit more creative lending, and we're starting to kind of see some of these options being advertised by lenders. Um, but overall, it's a lot harder to get a mortgage loan than what it was, back in 2007, 2008, for good reason. And everything's kind of held pretty steady since then. Um, I will say that it's super important right now that you work with a lender that is very experienced. And I would strongly consider and urge you not to work with a big national lender. And you might be thinking, well, a national bank might be better to work with than a smaller lender. And what you really want is someone in the middle. You want someone that's local, that's affiliated with a bigger network of lenders and banking institutions that are backing them, but that it's not so small that it's like a credit union or a local bank, because we've seen evidence of some local banks go under recently and kind of create to the or contribute to the trouble with banks going under. And you're also going to get the very, very best rates with someone in the middle. And so when you work with a really great agent, like myself, I'm going to connect you with a really, really great local lender that can help solve that problem and give you that confidence that you need, that you can trust that the lender that's behind you can make good on that loan, and they know what they're talking about, and they can help walk you through that process so that there's absolutely no surprises. But that is a very, very great question. Thank you for answering that or asking that, Anthony. So if you have any questions about making a move or what's going on in the housing market, make sure you drop that in the comments. I would love to answer and any questions that you may have or get you the answers, and we can definitely have a really good conversation and talk about that. So another reason why the housing market isn't going to crash is that Americans have a record amount of equity in their home compared to the housing crash of whenever that happened, 2007, 2008. And as you can see, Americans have built an incredible amount of equity in their homes over the last decade and beyond. So even if we had something that happened in the market that was incredibly negative for home sellers and they were forced to go sell their house, they're not doing a fire sale. They're still selling their homes for top of the market, what it's worth, because they're sitting on a great chunk of equity. We're not looking at a bunch of foreclosures or anything like that that would be coming on the market. There's never been a greater percentage of home equity that sellers have in their house than there is right now. So that's another kind of reason of why things are not like what they were. Freddie asks, is it a good idea to get a 5.75% rate arm and then refi in a year or two? I think it's an excellent option. So I recently bought an investment property and I did that exact same thing. I did a 7-year adjustable rate mortgage, and I was sharing that with my neighbor, and they're like, don't do that. It adjusts every single year. Why would you do that? And I went back to my lender and I was like, why do they think it adjusts every year? Do people really think that? And he was explaining to me that way back in the day, 30 years ago, when they had adjustable rate mortgages, it did adjust that often. But just so you know, watching at home, an adjustable rate mortgage only adjusts at the end of the term. So Freddie asked here, a 5.75 rate arm. So an adjustable rate mortgage comes in different term lengths, 5 years, 7 years, 10 years. And right now you can get pretty darn good interest rate, or at least a better interest rate, looking at a 5 or a 7-year adjustable rate mortgage than you can with a traditional middle of the road conventional loan. Now, what you're counting on and what Freddie says down here is that you're counting on you're going to be able to refinance that loan at some point during that term before your rate adjusts. So in my instance, I'm counting on that in the next 7 years, I'm going to be able to refinance my adjustable rate mortgage into a better rate that's going to lock me in long term. And if you look historically at the interest rate trends, you'll see that, history data is on our side. And of course, you have to kind of be willing to take that risk. But all lenders will tell you that that's a good risk to take, and they're going to give you that data and kind of weigh the pros and cons and show you the difference in your payments and all your available options for you and help you make that decision for you and give you that information. Robert is joining us. Thanks for joining us, Robert. Happy to have you join us on the live stream. If you have any questions, make sure you drop those in the comments. We would love to answer anything about the housing market or making a move to Georgia. So let's see here. Another reason that this time is not like last time is that whenever we had the recession back in 2007, 2008, the unemployment rate stayed really high for a long time. It took 6 years for the unemployment rate to recover and drop below 6%. If you'll see that we had during our last short little recession that we had during the pandemic, it spiked and then it quickly recovered, right? It quickly recovered. And right now, unemployment rate is holding really steady. And so it's almost one of those things that's kind of frustrating the Fed with inflation is that job reports keep coming out to be really good, even though the Fed keeps raising their interest rate. So that's why this time is also not like last time. Also, we talked about supply and demand. Supply is so low. You'll see here that nationally, this chart is sharing with you that the month supply of inventory. So just to give you an idea, a balanced market is whenever you have 6 months supply of inventory. And what that means is that if you had all the available homes for sale in a certain area and no new buyers came into the market, how long would it take to sell all of those homes? A balanced market would be 6 months. And as you can see, for the past couple of years, our supply of inventory has been in the 2s and 3s. So 3-month supply of inventory, 2.3 month supply of inventory. And what that means is that when it's below 6 months, the sellers have more advantages. They can kind of dictate more of the pricing. They can dictate the terms. And keep in mind, though, this is national averages. And so when we look at, and anytime that you're thinking about really making a decision based upon data, it's good to kind of have the macro level overview of what's happening in the economy nationwide, but you really want to know like what's happening locally. So here in the metro Atlanta area, our supply of inventory is even less than the national supply of inventory. So I will, let's see, share with you some data, and this is directly from our local MLS system. What you're looking at here, we have the black line is the entire greater Atlanta area. Green is Alpharetta, yellow is Cumming, and blue is Gainesville. And this is showing you the month supply, the current month supply of inventory based on data directly from our MLS system. So the greater Atlanta area has an average of 1.8 month supply, Alpharetta 1.6, Cumming even less 1.3, and Gainesville 2.0. So it is still very, very, very much a seller's market here in the metro Atlanta area. And this is why it's important to make sure that you're working with an agent that can really give you this inside information to help you make the best decision. Because the conversation that I'm having with you as a potential buyer making a move to the metro Atlanta area is, hey, what's your price point? Where are we looking in? And let's put together a plan of action of how to make this happen for you. Well, if you're moving to Alpharetta or Cumming, my conversation is, hey, there's a very low amount of inventory on the market. And so likely for some of our very best houses that we're going to be looking at, we're going to be in multiple offer situations. And oh, by the way, you also need to be prepared to pay almost full asking price or even over asking price if we're in a multiple offer situation. And you might be thinking, but Sarah, I see the headlines and it says home prices are declining. Well, it's all relative and it all depends on where you're at. So if we look at, let's do percent of list price. So as you can see, all of these areas, I think it's kind of small on your screen. I'll figure out how to zoom in before we gather again next week. But as you can see, just about every single area has 100% sales price to list price ratio. That means that the best houses right now are selling for, almost the exact same thing of what they're, what the sellers are asking for. So there's not a whole lot of negotiation room in the market right now. That's your takeaway that you need to take from this. And as you can see over the past couple of months, yeah, there's a little bit of negotiation room there, where homes weren't selling for the full asking price. But here we are in this market right now, and there's less supply on the market. It's the spring selling season, and this is what you're looking at. Of course, this is at the height of, the pandemic market this time last year. So when you see that homes are selling for less than they were last year, when we're looking at the Metro Atlanta market, of course, in April of 2022, homes were selling for 104, 102% of asking price. Well, interest rates, y'all, for, 3.5% this time last year. And we still had, a crazy amount of buyers that wanted homes. And so the conditions were a little bit different. So I do think it's like relative, and we got to take all of that with a grain of salt, and kind of contextualize that into local markets. So Robert says, love the videos. Thank you so much for watching. If you have any suggestions on a video that you want to see or that you think would be helpful, give me those suggestions. I'd love to hear directly from y'all of what you like to watch and what's helpful. And of course, a lot of our great ideas for videos come directly from this live stream and the questions that you ask and the information that you're requesting. Anthony says, is a recession the only way to flip inventory to a buyer's market? Yeah, pretty much, right? So in my opinion, yes, that would be kind of the only way to see a surge in inventory, would be something that would force sellers to sell their house. And really the only time that's going to happen is if they're experiencing severe financial hardship that would cause them, because you have to think they have to live somewhere, right? And so the only other alternative then is to go out and rent a house or move in with family members. And so, it has to be like a very, very extreme thing to cause more supply to come on the market. Another way of also looking at this is if new construction suddenly, like there was just an oversupply of new construction homes on the market, that could also cause prices to come down on homes as well. But builders aren't going to shoot themselves in the foot and overbuild. Also, builders are incredibly sensitive to what's going on, and they almost very delayed in their reactions of what they do. So even though we have all of this economic data that says, hey, we need more houses, build more houses, builders are very, 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 very cautious. And so they do not want to have what happened in 2007 and 2008 happen again, where a lot of them went bankrupt. Because banks have made it so much harder to obtain lending, it's even more difficult for builders. So a lot of builders that built houses during that time period are completely out of business. And so you have way fewer builders actually building houses today. So that is something that is causing that issue as well. There's few of them out there. Capital sometimes is hard to come by. And it takes, time and money to build those homes. So builders could also help that. Another thing that could help it, and Charles maybe you're kind of alluding to this, is that one thing locally that could happen that would really help the housing market is if the local ordinances would change such that we could build more affordable, tiny or smaller houses. You would be surprised at some of the regulations that counties and cities have in place that prevent a builder from coming in and building 1,000 square foot home and putting in, 50,000 square foot homes on smaller lots. A lot of these counties have ordinances that limit or that dictate that you have to have a minimum acreage lot size. You have to have a minimum square footage. You have to have a minimum amount of bathrooms. And so even if a builder had a good idea of how they could build affordable housing that would help solve a need, a lot of the ordinances and the codes in a lot of these areas are very kind of archaic and prevent the builder from even doing these things. And so it's a very, very difficult problem to solve. Charles, you're saying that you think that 24 and 25 will be the best time for first-timers to buy a home. Yeah, possibly. So I think one of the things that's going to happen over time, interest rates are going to kind of come back down, and that's going to become more steady. Hopefully, the growth in home prices will return to a more normal rate. So remember that over the past couple of years, we've had double-digit increase in home prices. Now we're back to a more normal level of home price increases. And so those two things over time will help the affordability of first-time home buyers, or at least kind of leveling a little bit more of the playing field. So that is something to keep in mind. So if you're joining us from the live stream and you didn't get a chance to catch it at the very beginning, I'm Sarah Mislowski with Moving to Georgia, and I produce content every single week helping you discover towns and what it's like living here, the pros and cons, and answering all of your questions about the Georgia housing market. We go live every single Wednesday, or just about every single Wednesday, answering your questions. So if you're just joining us and you have a question about making a move to Georgia, or what the housing market is like, or any question about the buying, selling process, make sure you put those comments down there, ask those questions, and I'll answer them right now, live on the stream right now. So let's go back and look. I think one of the things that's interesting, and another reason why home prices haven't quite come down here, is because let's see. Let me make sure I'm getting the right screen that I want to share with you. Is that we have so many of y'all from out of town joining us here in Georgia and making the move to Georgia. So we have a lot of people relocating from out of state. Home prices comparatively here in Georgia in a lot of these areas are way more affordable to you. One of the things I felt like was very interesting is you can go on Redfin to their research tab, and you can actually look at different metro Atlanta market areas, or any metro Atlanta, any metro market throughout the United States, and you can kind of see what's happening in the housing market. So one of the most popular places that we help people buy houses in is the area of Alpharetta. And so you'll see that the median sales price of a home in Alpharetta has increased 2.7% year over year. And so this is, again, getting back to more of that normal growth, which is what we want to see. We don't want to see 15% more expensive than what it was last year. But you can scroll down and you can see people moving to Alpharetta and where they're moving from. You see that we've got that over between February of last year to April of this year. Just in between February of this year and April, 2,000 people relocated from New York, 1,200 people from Los Angeles, 1,100 people from Washington, D.C., California. We've got Chicago. So very interesting to see where everyone is relocating from. And I know that we have a couple of New Yorkers watching today on the live stream. There has to be some Californians watching on the live stream as well, because those are probably the two top areas that we get the most amount of calls from people that are relocating here to the Metro Atlanta market. Thank you, Robert, for loving my videos and watching them. It's super helpful, and it's always fun to get that feedback. And if you have any questions, make sure you ask them. I'd love to answer them, or any suggestions on future videos. I would love to take your suggestions and go out and make that content for you. So thank you for watching. Let's see here. Another one thing that's interesting to me is that despite the interest rates being higher, we're still experiencing an increase in activity. And so this data is only going back to February of this year. So we don't have the data from March and April, but showing activity has gone up. Buyers have gotten used to, okay, this is what the interest rates are. If they come down, great, but we're going out and we're going to buy a house. And we're seeing this in the amount of actual showings that take place. And the showing activity is still higher than what it was even before the pandemic. So that's something that's important to note as well. All right. Well, if y'all do not have any more questions, we will end the live stream. And of course, you can find a whole host of videos here on my channel, Moving to Georgia. If you're thinking about making a move, make sure you reach out. I want to be your real estate agent. So my contact information is directly below this video. And we will make sure that we will help you. Robert says that you cannot wait to see more on Brazelton and Houston. Yes, we will definitely get some more content out about Brazelton and Houston. It's one of my favorite towns. It's got so much to offer, and it's a really, really, really great area with lots of really great neighborhoods there as well. So we will definitely make more content on that. So I appreciate you watching and joining as always and spending time. As Charles says here, meeting adjourned. I will see y'all next week.